Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields end the week on the high side of the range. In fact, it's the first settle north of 295 on a weekly basis going back to May 18th. So the market is starting to shift a little bit. Recall not too long ago we were talking about the 280 to 290 range lulling the market to sleep. We've now broken out of that to the upper end. We are still within that wider band, we'll call it 310 to 275, that range that takes you back to the end of May to today. But I think that right now the market is just leaning possibly towards that. The back end of the curve has struggled to see yields elevate, and this could be the first step in them trying to, I guess, again, near those highs that we saw back at the end of May. And market volatility, while it's been trending lower, something that sounds like a broken record when we talk every Friday, we did see a modest uptick, and it's actually, we've seen a modest uptick now 2 weeks in a row, although when I say modest, I really do mean modest. It looks unchanged if you don't have your glasses on. So I think that right now market volatility is still suspect of what's going to happen, not necessarily, over the weekend or next week, but more so looking out the timeline a little bit. The second half of the year still seems very cloudy. We're hearing that via equity earnings. We're hearing, a tug of war between the market, the reality, and then the Fed. And I think that right now there's just so much uncertainty that we should be seeing market volatility uptick. We should be seeing it higher, or at the very least, we should see it stop going down. There are things to be concerned about. There are uncertainties. The market needs to reprice them. And I think as we head into third and fourth quarter of this year, we're expecting a tightening in September and one in December. After that, it gets very murky. And even that one in December right now, it's priced, but it could come back to 50-50 very quickly as far as odds go until we wait and see. We've got a strong GDP number today. And how do we see those next quarter three and quarter four numbers, expectations? Where do they lie? And let's look at the GDP number for today. Yeah, it was 4.1%. It was right in the wheelhouse of wow. And I think that anything north of 3.5 would have been a good number. So this is considered probably a great number. Consumption was up, that's good. The only but I see in this number is that it was built a lot on exports, and those exports may have been trying to front run a lot of the tariffs that were coming down the line. So it may be interesting to see what happens as we move forward. Likewise, growth here, the tax cuts are starting to take effect. We're starting to see a few murky signals in the housing market, but I think that right now things are going as expected and going well as far as growth goes. This is something the president has talked about. This is something he has really been talking about going back to his campaign. So I think that these higher growth numbers are attributed to some of the policies he's put in place since he hung his hat in the Oval Office. And right now, as we look forward, can they be sustained? Can a Fed raise rates into this type of expansion and keep those numbers up? So there's a lot of what ifs out there. And again, I'll take it back to market volatility. Market volatility is very low if you're looking at an expanding economy with a Fed that wants to tighten, and inflation kind of sitting there right on the level with a lot of uncertainty, whether it be coming from overseas, whether it be coming from geopolitical risk, whether it be coming from continued economic growth here, whether it come from the housing, the autos. There's a lot of things up in the air, and I think that the market may be overlooking some of that. I'm a buyer of volatility here over the longer term, as well as it's pretty cheap, and the market does seem to be questioning whether or not we're going to see those numbers come in as expected. So as we head into the weekend, 10-year note yields on the high end, but can they stay there is the question. This is Todd Colvin coming to you from the floor of the CME Group.